There's yet another big global cue that we will be discussing through the morning, and that is Amazon's announcing that they will cut 18,000 jobs out of a total workforce of 3 lakh. That works out to 6%, as Sonia points out. So that's something that is going to have a sentimental impact. But while speaking about tech stocks, let's get to another tech major. Microsoft chief Satya Nadella is in India, and he spoke to Shireen Bhan. He told her that in the next 2 years, he does expect challenging times for the tech sector. In an exclusive interview with CNBC TV 18, he said that tech companies need to focus on efficiency and productivity to get through this difficult period. Hear him out.
Many CEOs are now talking about having to respond to the new economic reality. What is that going to mean, not just for Microsoft, but for the tech sector in general? Are we likely to see more pain, especially when it comes to retrenching, downsizing, margins going to be under pressure, guidance going to be a downside risk to that as well?
I think overall, quite frankly, whether it's for us as Microsoft or the tech sector, it's going to be very, very important to look inside and say, are we as efficient as we need to be competitive? I mean, at the end of the day, just because we are a technology company doesn't mean that we are the most efficient at what we do. And so as the paradigm has changed, as the bar has risen, we have to measure ourselves with the new bar. So definitely and also the growth picture has changed, we have to have operating expenses that need to be aligned. So definitely we are going to look at all of that, and it means that we are not sort of immune, as I said, to the global changes. But the one interesting thing to your point, though, is tech industry employment is not tech employment.
Yeah.
That, I think, is the key divergence that needs to be well understood, because that, I think, is positive, by the way, for the tech industry long term. Because if you look at it, overall tech jobs is actually increased. The tech jobs now are coming in financial services, in energy companies, in retail, manufacturing, and that's healthy, because in the long run, all those employees in all those industries are going to consume more tech infrastructure, right? When we think about our cloud business, long term we're bullish because of the fact that there's more employment outside of the tech industry of technical talent. And so that's, I think, what we are banking on.
No, I think you underscore the labor market resilience aspect. But, what we've seen, especially as far as the stock markets are concerned, and I know that CEOs often say that don't focus on what the markets are telling you, but they seem to be suggesting that there is significant pain in store for the tech sector. How do you read what's happening with the way that the markets have corrected, specifically the tech stocks, and what that signals?
For me, look, I'm never the one who would ever say ignore the market, because the markets are smarter than us all. I think they are reflecting on is, look, where is the growth coming from? And how should we think about normalizing for that growth? And so I think stock performance, economic performance are not exactly the same. But the key for us as a tech industry, I always go back as a percentage of GDP. The simple question to ask is, do we think tech spend will increase or decrease? If we believe software and digital infrastructure is going to be important in construction, in energy, in manufacturing, long term, then you have to be long on tech industry. But will we have to go through our own cycles around productivity? Absolutely, like anybody else. But that's at least my perspective. I wouldn't look, the only reason why I would say ignore the short term is because in the long run, we would be fine with demand. But in the short run, what we have to focus on is our own productivity and making sure we are at the efficient
How would
frontier.
you quantify short term and long run?
I would say the next 2 years are probably going to be the most challenging, because after all, we did have a lot of acceleration during the pandemic, and there is some amount of normalization of that demand. And on top of it, there is a real recession in large parts of the world. And so the combination of pull forward and recession means we will have to adjust. And that will cycle through the demand cycle, and in fact come out of it with what can be another massive growth cycle for the tech industry.
Okay, all right. Well, most of the global markets are trading in the green, but let's get stock specific and let's get fundamental analysis going. Nishal Maheshwari, CEO Institutional Equity and Advisory at Centrum Broking, joins us to talk about a whole host of